Welcome to the Motor Carriers Insurance Education Foundation in-depth review of coverage addressing the unique operations of a motor carrier. Auto liability. This part of it is going to be other than any and specifically described autos. These webinars are not filed for state CE and is a learning opportunity only. Questions. If you have any questions, please send an email to trs@mcief.org and we'll answer them and reply, and we'll share the question and answer with everybody who's attended. The auto liability insurance agreement coverage. We will pay all sums an insured legally must pay as damage because of bodily injury, property damage to which this insurance applies, caused by an accident and resulting from the ownership, maintenance, use of a covered auto. The key part of this is the covered auto. So what's a covered auto? If it's not a covered auto, then there is no responsibility on the insurance carrier to respond to an accident or crash. So that's the key component here. Make sure it's a covered auto. To determine what's a covered auto, the list of numbers that we put in item 2 of the deck. For the policy to respond, the accident must be caused by an auto that meets the definition or the description of the symbols that defines a covered auto. So this is the part we're going to spend today to wrap this sessions up on symbols. Where you list this is in item 2, schedule of coverage and covered autos. That's the part. Here's the coverages and here's what's a covered auto. This policy provides only those coverages where a charge is shown in the premium column below. Each of these coverages will apply only to those autos shown as covered autos. Autos are shown as covered autos for a particular coverage by the entry of one or more symbols, thus numbers, for the covered auto section, from the covered auto section of the business auto coverage form or the motor carrier's coverage form. These are the 7 items that have to deal with liability. The one that we're going to focus on is obviously the liability, which is the very first line. You have personal injury protection, PIP. You have added PIP. You have concerns in Michigan with special ones, auto, med pay, uninsured motorists to uninsured motorists. Those are things that have to deal with liability other than that property damage part of it. But that's a part of the uninsured coverage in here. But the one that we deal with is on the liability. And so you have the line covered autos. Entry in one or more of the symbols from the covered auto section of the business auto coverage form shows which autos will be considered covered autos, therefore make the policy to respond. Policies will use numbers to tell what type of autos as it relates to the insured will require the policy to respond. These numbers will be shown in item 2 of the deck and documented. There has to be a number for all coverage needed. The number symbol will have meaning. It defines the autos that are covered autos, again, therefore the policy response. Insured must have the correct symbols to have coverage at time of accident for each coverage needed. So things that are unique to motor carrier. That's the government regulation. Registration, financial responsibility imposed by the federal and state governments. Insurance provider meets requirements. Promise to protect the public, including both owned and non-owned autos. That's the promise that the financial responsibilities spell out. If no coverage, then the insurance company still could be obligated to address damages to the public because of the 91X filing sent to FMCSA, the MCS9 endorsement added to the policy, or the state forms like Form E sent to the states. These financial requirements do not provide coverage to the insured, not even defense, but do obligate the insurance carrier to pay a judgment rendered against the insured. So again, if they not a covered auto, then we, as an insurance provider, there would still be obligation to respond to protect the public. Financial responsibility obligates the insurance company who provides the proof to protect the public. If there's no coverage in the policy, if the accident was caused by a commercial motor vehicle, an auto 10,000 GW or larger or not, it is specifically described on the it is specifically described on the policy. So if there's no coverage in the policy, and that would be because the vehicle is not specifically described or does not raise to the level of covered auto, then the policy would not have to respond. Also, our premium base is autos, premium based on autos, power units, and trailers that the motor carrier operates as part of their business and under their DOT MC number. They're owned or not owned. So we also need a premium for vehicles that the insureds are operating as a part of their business that will cause the policy to respond. Verification units used by the insured. This is also something unique to the motor carriers. Underwriters to establish the estimated premium at inception. This is what we look at, the public information. But during the policy period, that also we can monitor the vehicles insurers using when they get inspected, and those reports are sent to the insurance carrier. And at the end of the policy term, we can use this information to audit. So those are the three areas that we can get to the proper premium, or at least the estimate premium, and ability to get paid for the insurance company to recover money for the coverage provided of a covered auto. We can look at it when we at inception by looking at public information. We can monitor during the policy period when the vehicle gets inspected by its serial numbers and get that report to see if it's on the policy or not. At the end of the audit, end of the term, we can audit to collect the premium. Information from the insured. They say how many units they own or lease as a part of the FMCSA requirement to obtain the DOT number, and their update every 2 years requirement, and the 150. The financial statements for revenue for about every $200,000 per unit. Non-owned. If they lease, if they have a financial company obligation, or if they use owner operators, they'll look at the 1099s that have been paid to owner operators and what that would be paid. Again, for about every $200,000 paid to an owner operator, that would represent a exposure for a unit. Safer also tells us the information provided by the motor carrier, and that's the 150, and the update. This is information that's provided by the motor carrier to the government. The underwriters look at for one unit, one driver, about 105,000 miles. That represents a unit. Then you have the roadside inspection. This is when the insured gets pulled over and done a 1, 2, or 3 inspection. That's the level. You can review units. Will have the serial number listed on these inspections. You review before providing quotation to make sure that we're addressing all the serial numbers that have been inspected in the last 6 to 12 months, or in the after inception, again, a unit not listed on the policy schedule. Then why not would be the answer you have, because we can monitor those serial numbers during the policy term. And as an agent, or you'll ask, why isn't it on the policy? And then that would have to be responded to, or the insurance carrier will take actions either by premium adjustment or accept the answer. What we're going to talk about symbols here after we go through the basic symbols is hired auto coverage. This is symbol 68 in the motor carrier's coverage form, symbol 8 in the business auto form. Hired autos only. Only those autos you lease, hire, rent, or borrow. This does not include any private passengers type autos you lease, hire, or borrow from a member of your household, any of your employees, partners, if you are a partnership, if you are a limited liability company or agent, or members of their household. So we're talking about here the commercial vehicles that are leased, rented, or borrowed from the public. They would be considered an auto that the motor carrier leases from an owner operator would be the main exposure that we have here. Providing hired auto to satisfy customers, motor carriers requirements. This is things that we have to realize is that most of our insured customers require certain symbols to be given. And one of those that's a common requirement is hired auto coverage. When you write a risk as a retail agent, you need to find out what their insured customers require for insurance coverage, to have proof sent to their customers to make sure you can satisfy those. And one of the things that's typical is to have hired auto coverage provided on the policy itself. We verify the use of the tractors with the inspections we talked about before, now mainly owner operator. The insurance company would want to have all owner operators units listed on policy, all of them. That was for premium purposes, underwriting purposes. And again, remember that is auditable. So we have hired auto, but we have a conflict here because these are owner-operator vehicles. We provide the hired auto as an insurance provider because our insurance customers require those, but we need to quantify how many vehicles the insurer is using that are owner-operators vehicles. We can do that by the inspection reports and find out who owns those vehicles at their inspection. And then, but the insurance carrier, even though the owner-operated vehicle becomes a hired auto from definition, the insurance carrier still wants those vehicles specifically described in the policy, so we can make sure we get the proper premium, and also we can underwrite it, meaning who the driver is. And if it is not done, and it's left to be covered under the hired auto only because the vehicle is not specified, then it would be subject to audit, and so the insurance carrier would send a bill to the insured, and the insured would have to pay that bill, and it could be an obligation where the retail agent would be involved in the collection of those that audit. Insured hired and non-owned auto exposure may be addressed by adding symbol 68 to any symbol used other than any 61 or 71 any auto 10,000 GVW or larger. This makes these non-owned autos, meaning the owner-operator's autos, a covered auto, therefore would require the policy to respond. It says you lease, hire, rent, or borrow. Again, in the concern of an owner-operator, it falls into the lease and hired category, because if the insured is using an owner-operator and allow that owner-operator to operate under their DOT number and MC number, then there must be a written agreement between the parties, a lease, to allow the owner-operator to use those the authority and the registration of the motor carrier they're leased to, and there needs to be a copy of that lease in the vehicle. So when in the vehicle as the use in the for-hire motor carrier arena. So let's talk about when would an insured other than a for-hire interstate carrier use a hired auto. It would be temporary substitute. It's when an owned auto is out of service, coverage for the liability only in the form itself, and there'd be no premium consideration there for the temporary substitute. There needs some auto for short-term lease for increased business. Employees or insured drives the unit used by hire. This is what would be typical for a risk that you have is a beer company or a furniture delivery company or appliance delivery company or a contractor. If they end up with a hired auto, they'll go to a service to rent those vehicles, a rental company, and they'll be for one of their main units or covered autos that are broke down, and they take that as a replacement and or they increase it. But in both cases, the rental companies, the people they're getting the vehicle for, would want proof of insurance coverage before they allow the unit to be rented, given to the insured. So this is what you would have other than for-hire interstate motor carriers, because that's the unique exposure in the hired auto. Is for the for-hire interstate carrier, they use owner-operator as part of their business. The lease requires a DOT number on a non-owned auto. The bill of lading is in the insured's name, so it must be a written lease. The DOT number of the motor carrier must be on the side of the non-owned auto, and the shipping documents, the bill of lading, must be in the name of the insured, not the owner-operator. And then from federal FMCSA requirements, responsibility for damage to the public is the insured, the DOT number holder, the MC number holder. Because if it's not a covered auto, the public would still be protected by the 91X MCS 90. And also remember, hired auto is subject to audit too, which we premium later. No proof of, and here's the key part here between other than for-hire interstate motor carrier. No proof of insurance required when insured leases the non-owned auto from an owner-operator. It's not like leasing it from Ryder or Hertz or Penske, where they will require proof of coverage before it goes out the front door. Owner-operators do not have that requirement. So there's no before the lease situations that a notice will be given to the insurance carrier about the insurers using these non-owned autos. If the truck is stopped, an inspection reports based on the DOT number on the side of the insured, and so the VIN number would be reflected. So this is the only way, and this is a very passive way to find out if the insured is using a vehicle not on the policy that they hired, leased, rented, or borrowed. They do not own. It's when the vehicle is being inspected, that VIN number then will be on that report, and so the insurance carriers will monitor the VIN numbers of the vehicles being inspected under the motor carrier's DOT number and know if a vehicle was on the policy or not. This is how the insurance carriers police or assure themselves that they are getting the premium for the vehicles the insurers are using, not just relying on the hired auto symbol itself. Owner-operated leased autos. would be a covered auto if hired auto symbol 68, 68, 71, or 72 again or larger is provided. But insurance provider wants all units, even owner-operators units listed on a policy. This is a conflict we have here. The customers of our insurers require hired auto. The insurance carriers will provide hired auto coverage in addition to the specifically described autos, which would be 67. However, even though it's covered auto there, the insurance carrier still wants those autos scheduled on the policy because they want to know about it up front. It's easier to monitor this and collect the premium up front than it is later on an audit situation, which might or might not be collectible after the fact. So even though that it would be a covered auto if it's owner-operator's vehicle, the insurance carriers will want even the owner-operator's vehicle scheduled on the policy, and they go to great extent to make sure that they're doing that, and the retail agent needs to understand that. So hired auto added to specifically described auto, symbol 8. That's because of customer requirements. It also, because of federal responsibility requirements, make the insurance company pay for public damage caused by the hired auto the insured uses as part of their business. So for that reason, we want to also, that would be the hired auto would protect that. The hired auto exposure of a for-hire motor carrier is when they use owner-operators. That is the main concern, and that's what makes the hired auto exposure unique to for-hire motor carriers. What the insurance carrier does to protect themselves is they have a higher auto rate. Remember, this makes it auditable. In fact, in my career, I have been in two major concerns where audits, one up in New England, where there's misunderstood about brokerage, and under the hired auto, if any, they sent the insured a bill for $1,400,000. Also was in a dispute in front of the Department of Insurance, both of these Department of Insurance in Kentucky, where you had three brothers sharing vehicles, and again, the bills got sent to each brother for about $900,000 on auto. Granted, both of those were assigned risk, but this is where you have the problem that the hired auto is auditable, and then the insurance company worry about collecting that. So what they do is for the hired auto rate, they use 1.25 to 1.5 more to make it more costly than scheduling the policy. Let's use a simple example here. Just make it easy math so you can understand that. Let's say that we want $6,000 a power unit per premium per vehicle, per power unit. And we want so that would be $6,000. And a typical truck needs to generate about $200,000 worth of revenue to keep it on the highway. So that would be a $3 rate. And so what the rate would be in the audit would be 4.5 or 4.25 rate per revenue paid to the owner operator. So if we schedule on the policy, it would be a $6,000 premium. If we allow it on the hired auto, because of that one unit, it would be $9,000 worth of premium. So we'd get that much more, or $750,000 or $7,500 worth of premium. So this is what the insurance carriers do to protect themselves. They also monitor the autos being inspected. If report that an auto inspected under the insurer's DOT number is not on the policy, then what? It'll either be picked up on an audit like we talked about where there's a premium there, or it'll be added to the policy even without the consent of the insured, and the agent would be sent a bill, and the insured would be sent a bill to pay the bill, which will put the agent back in here. So the way the insurance carrier protects themselves is make it more costly to not have the vehicle scheduled on the policy, even the owner-operator's vehicles. And second is to audit, and that or during the audit time get more costly, but also to monitor continuously and add them to the policy even without the insurer's consent, because they're using that vehicle. And if they don't pay that, then you have a cancellation provision coming down the line because the bill is not paid. So consideration for our own schedule. How does insured use these non-owned autos? Use them in the insured's business. That's a hired auto. Lease with or without a driver. That's the difference between Hertz and Ryder and Penske versus an owner-operator. In all cases, the OT number must be on the side of the unit. The bill of lading, that's a shipping document, must be in the name of the motor carrier or insured. Does the insured motor carrier provide primary coverage for the non-owned autos? In most cases for owner-operators, they do. In a lot of cases for leasing companies, they do. Sometimes does the owner-operator contract the owner of the non-truck auto provide primary coverage? Is insurance carrier? Sometimes that will happen, particularly retentions, some kind of captive group, some kind of intermodal operation. Then that primary coverage is it acceptable or not? Even if it's acceptable, then you would not have primary exposure, you would have an excess rate. One of the things that are misunderstood sometime in the hired auto rating is that there is two areas here. We have a primary coverage and we have an excess coverage. The primary coverage would be where that premium that we talk about, $4.50 per hundred of revenue that would develop that additional premium. Most of the time you put estimated premium would be, if any. I suggest not doing that if you have a situation where you know that the insured has exposure. You want to try to collect as much up front, because at audit time it would be difficult to do that if there is an exposure. You have excess where they have their own primary coverage, and then it'll be excess. Why they need to be excess? Because the coverage on the policy would protect the insured and pay the defense. That's coverage on the owner-operator's policy on the non-auto policy. However, the insured still will be naming the suit because their name's on the side of the truck. So you need an excess premium, either 10 or 15% of where it would be if it was the primary coverage here. But this is what we overlook sometimes, and that would be a situation where you would have the question, well, the insured is using that vehicle, but they have their own primary coverage, owner operator. That's when the excess premium would come in place. All right, that's the hired auto exposure. That's one that we have to consider. That's one that's to be added, and that's the one that's going to cause most of the difficulty. There's a couple other symbols I want to talk about before we get through with this session of the symbols other than specifically described in any auto. That's not on auto. Only those autos you hire, lease, rent, or borrow that are used in connection with your business. These include private passenger type autos owned by your employees, partners, if you are a partnership, members of your members, if you are an LLC, or members of their household, but only within use in your business as a personal auto. The two things here: hired auto, the premium is primary; non-auto is excess. So if your insurer's using this, employees not on, using an auto not on auto, then that policy would respond first, and that policy would protect and give defense to our insurers because of being held vicariously liable for the actions of those vehicles. And our coverage that would have for the non-owned auto would be in excess of whatever is covered on the vehicle that insurers use in your business. Now, we're talking about lease. These are vehicles that are not owned and leased. These are things that just involve personal auto. So it's typically called employee not owned. This would be your sales rep, if you have some, but more important, it would probably be mechanics. It's very common for a motor carrier to have mechanics, and in those mechanics, they would have a lot of times their own pickup trucks they use to run up and down the highway to take care of those things. In those cases, the pickup trucks insurance carrier would be primary, and ours would be excess. Or if they were running errands, like going for a parts runner, who's using their own personal cars or personal pickup trucks, or some office staff going down to do the mail and paperwork here. And so in those cases, it would be a primary coverage on the vehicles of the sales rep, mechanics, or somebody running the errand, and our policy would be excess if we have non-auto coverage. So these coverage will be excess. That's the key here. There is an exposure here, though, that we do not consider, and that's brokerage. And this is a concern you have offering hired auto or any auto if your insured has brokerage in the same legal entity. Because a brokerage situation where a broker accepts a load from a shipper and then gives it to a motor carrier to haul it, that vehicle that they give the motor carrier to haul it is not owned by the broker. It's not leased, hired, or rented by the broker or borrowed by the broker. So therefore, that's a non-auto exposure. And really, we have no rate. ISO has no rate for that exposure because typically the rate for hired auto is based on number of employees, not considering broker. This is why it's so important to have it in separate legal entities so you don't get this exposure on your hired auto, on your primary policy for the motor carrier. However, as far as our insured customers, Same thing happened here. If the insured customer is named in the suit, the broker or the shipper is named in the suit, they would get their primary coverage on the auto policy provided by the insurance carrier who's insuring the trucker itself, and their non-on auto would be in excess of the coverage provided by the truck who hauled the load. So this is where you have that consideration. This is why this is an important factor. But for a motor carrier, there's very little exposure of non-on auto, other than if they have a brokerage operation, which does concern me, and so often we overlook that. These are the basic symbols. Any auto that we talked that's available to you earlier on, to look at those part of it here. We do not discuss in our discussion here owned autos. All private passenger or all but private passenger. Those would be the symbols here. The reason we don't do that is that it's rarely used in the motor carrier's world. The triggering coverage for all of those, any auto owned, has nothing to do with listed on the policy. And this is the concern that we have by providing these symbols that we want to find out up front. Because if we have those, we have to have a better way to monitor than the insured tell us about them. Any auto, again, as the other discussions we had, would be based on some kind of revenue or mileage per vehicle, and would get a premium not based on knowing about the auto, but the revenue and miles generated by owned and non-owned autos. The specifically described autos, we talked about them having to be required on the policy, and it must be listed there in item 3 to have coverage. And we just talked about hired non-owned auto. So the one that we did not drill down into is these owned, because that's typically not addressed here, because if it's owned, the choice is to have it specifically described, not any owned. And so that's the key here. So 62, 63, 64, the key is at the time of loss, that the insured own it. It has nothing to be scheduled on the policy. So for the policy to respond, the auto that caused the accident must be owned. There's no requirement to be listed. This is why rarely would you have it here, because the option of insuring for hire motor carriers would be either to have it covered under the blanket, any owned, which then the premium will be based on usage, or knowing about it. So that's the part here. When the adjuster has this, it just heard on. Motor carriers will typically not have these symbols available because of what we just talked about. But some of our insurance customers now are requiring 62 owned autos only. And I've had this a couple of cases, and I've talked to our underwriters about it. Underwriting consideration: if owned by the insured, typically it's known by the insurance provider. Why? Those are the vehicles being inspected all the time. We know about those. And a lot of times we've had proof of coverage, either for physical damage or for license plate purchase. So owned autos are pretty easy to quantify how many our insureds have. Now we're talking about, remember, we're not talking about a major fleet here. We're talking about someone with 5 to 12 units. Once you get a 20, then we're going to any auto. We're talking about the smaller motor carriers, and they're the units we know about. The problem with owned autos only is that now you're picking up private passenger vehicles that could be owned too. And we talked earlier about in earlier sessions that we do not want to provide private passenger vehicle coverage on the commercial policy. So that would be concerned here. If your insured ever gets a customer, again, as agents, you want to find out up front about what your insured customer's requirements are. And if they require symbol 62, owned autos only, in addition to hired auto, this is what the typical requirement would be. We need to discuss that with the underwriters. Underwriters, you need to understand that there is a situation where if you're comfortable about this, you can get a comfortable feeling about knowing about all owned autos. So for a good risk, what underwriter is comfortable about knowing all owned autos, meaning inspection. They don't use owner operators. We have the financial statement. They don't 1099 any. They say they don't use owner operators. You would not want to use symbol 62. You would want to use symbol 64, owned commercial autos only, to be added to hired autos. And so that's the answer to that. And I only point this out because this request is happening. And if you're going to write a policy for the insured, you must make sure that the customer requirements are met, or you won't be able to write the risk. And those customer requirements typically would be not only specified, but hired auto, and in rare occasions also all owned autos. And the problem we have now, if we have that requirement, 64, that's all on commercial auto. 68 is hired auto, and 72, that's almost any auto, 10,000 GVW or larger. So that would be a consideration in those areas there, and it would be required to be scheduled, owned, and then you'd have the audit situation. But that would be relating to almost any auto coverage. So again, in conclusion, for all these symbols, the important part to make the insurance, the auto liability insurance agreement to respond when a crash happens, it must meet the requirement to be called, the accident was results of the ownership misuse of a covered auto. That's why these symbols are so important, and that we need to understand this, and the insured needs to understand that. So when the adjuster first determines if there is coverage, the first consideration was the crash caused by a covered auto. Auto described meets definition of the symbols. Need to explain to the insured what has to be done to have an auto the hired auto interstate motor carrier uses in their business to be a covered auto, plus the cost. That needs to be done when you deliver the policy. You need to go over the exposures you have where it symbols 61 any auto or 71 any auto 10,000 GVW or larger, or specified or hired auto, and emphasize that the hired auto owner-operators vehicles need to be scheduled in the policy to save the premium later. But this is a part of delivering the policy, prepare the insured when and if a crash was happened, is to explain the symbols to them. They don't understand this in a lot of terms, and explain why the insurance carriers are requiring the vehicles to be scheduled, so that we know about them, we underwrite the uses of them, we underwrite the driver of them, and we get the premium up front. And it's not subject to audits. This is the concerns that you have. Hopefully you got enough out of these symbol deals to give you a better understanding of what the symbols mean, so you can provide the insurance for hire interstate motor carrier, and be more comfortable that you're getting the premium and you're properly underwriting it.